Hey everyone, welcome back to Corporate Decoder, the place where we decode Wall Street's secrets. And let me tell you, Gevo has a little something to confess today. This isn't your typical quarterly update. Gevo is back with an amendment to their annual report. And it turns out they forgot to mention a few things about their leaders' stock trading plans. Let's dive into what's really going on behind the scenes. Before we get into the nitty-gritty, if you like getting these clear, no-nonsense breakdowns of company filings, make sure you're subscribed. Also, we've got a fantastic community over on Discord where we chat about all things finance, and you can find that link in the description below. So what's the big deal? Gevo is filing an amendment, which is like admitting they missed something in their original report. Specifically, they forgot to disclose that some of their top executives and directors, like Angelo Amarelli and Gary W. Mize, set up or changed their stock trading plans. Think of these as pre-arranged ways for insiders to buy or sell company stock without it looking like they're trading based on secret information. This is actually a pretty important disclosure, and it's a bit curious that it was inadvertently omitted, as they say. Now, because they're filing this amendment, they also have to resubmit certifications from their top brass, the CEO and CFO. They've included these as exhibits to this updated filing. The funny thing is, because they're not changing the actual financial statements or disclosures about internal controls, the usual parts of these certifications about financial statements and controls are actually left out. It's like saying everything financial is still the same. We just messed up on this one disclosure. And we left out. It's like saying everything financial is still the same. We just messed up on this one disclosure. This is where it gets interesting. They're telling us about specific stock trading plans called Rule 10b5-1 trading arrangements. These are designed to help executives buy or sell stock at planned times, which can protect them from accusations of insider trading. Think of it like setting up an automatic stock sale for a future date, regardless of what the stock price is doing then. The filing details who did what and when. Let's look at the key players. Patrick Gruber, the CEO, terminated one plan and adopted a new one. He terminated a plan that was set to run from mid-2024 to mid-2025, and he adopted a new one that will run from early 2025 to 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 early 2026. The new plan involves potentially selling up to nearly 3 million shares. That's a significant number of shares. Then there's Christopher Ryan, the president and COO. He also terminated a plan and adopted a new one. His new plan is set to start in late February of next year and go for a full year, allowing for the sale of over 850,000 shares. Their chief financial officer, Lynn Small, also followed a similar pattern. She terminated one plan and adopted a new one. Her new plan allows for the sale of up to about 115,000 shares starting in late February 2025. Paul Bloom, the chief business officer, made similar moves, terminating an existing plan and setting up a new one, involving the potential sale of over 700,000 shares. Andrew Schaefer, who handles customer marketing and branding, also adjusted his trailing plans with his new plan allowing for the sale of around 146,000 shares. Kimberly Boron, responsible for people and EE, likewise updated her trading arrangements, with a new plan approved to sell up to about 137,000 shares. And we can't forget the directors. Angelo Amarelli, a director, adopted a new trading plan that allows for the sale of over 325,000. Gary Mize, another director, also adopted a new plan. His plan, which starts in May 2025, permits the sale of up to about 224,000 shares. Now, what does all this mean? On the surface, these are just regular trading plans. Companies use them to provide executives with liquidity while minimizing the risk of insider trading accusations. It's standard procedure, really. However, the fact that these were inadvertently omitted from the original filing is a bit of a red flag, suggesting a potential lack of attention to detail or a significant oversight in their reporting process. From a numbers perspective, we aren't seeing updated financial tables in this amendment, as it's purely for disclosure of these trading plans. The original Form 10-K would contain the actual financial story for the year ended December 31, 2024. This filing is more about corporate governance and executive behavior. What we can infer, though, is that these executives are planning to sell a considerable amount of stock in the near future. For Gevo, which operates in the renewable fuels and chemical space, executive confidence and their belief in the company's future are often signaled by their actions. When executives are looking to sell significant portions of their holdings, it can sometimes be interpreted by investors as a sign that they believe the stock might not appreciate much further, or could even decline. On the flip side, the adoption of new plans suggests they still see value and need a structured way to manage their personal finances. Gevo's in a bit of a complex market. They're trying to scale up production of sustainable aviation fuel and other low-carbon products. This requires massive investment and execution. The leadership's ability to manage their own financial portfolios while steering the company can be a barometer for how things are going. Looking at the broader picture, the company's strategy hinges on successful technology implementation and market adoption. Any perception gap between executive confidence and operational reality can impact investor sentiment. These planned sales, though structured to avoid insider trading optics, are still worth watching. They could suggest that some insiders believe the current stock price presents a good opportunity to cash out, at least partially. We don't have specific financial figures here to analyze like revenue or profit in this particular filing, but the overall context matters. Gevo has been working to secure partnerships and financing to build out its production facilities. If key executives are planning to sell shares, it's important for investors to understand the company's progress on its expansion plans and its overall financial health to gauge the significance of these sales. It's a balancing act for the company, providing leadership with liquidity while maintaining investor confidence, especially in a growth stage company where every signal matters. Overall, Gevo's situation here highlights the importance of transparency in corporate reporting. While the omitted information is now being disclosed, the initial oversight is something to note. The planned stock sales by its top executives and directors mean it's crucial for investors to keep a close eye on Gevo's operational execution and progress toward its ambitious goals in the renewable energy sector. So that's the latest from Gevo's amendment. What do you think about these executive stock trading plans and the initial omission? Does it raise any red flags for you? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and don't forget to subscribe for more in-depth corporate analysis. And hey, join our Discord community through the link in the description. It's a great place to discuss these topics further. Thanks for tuning in and I'll catch you in the next one.